Good NFP day, everyone. NFP today stands for No FOMO, Protect Capital. Everyone with me? No FOMO and protect. All right. Hi, Shahab. Everyone doing okay? So let's react to the reaction, see what happens here. Trying to predict it's a coin toss. You want a bull or bear coin, you just flip it. Looking at the euro here, we're in this again, this do or die situation, 1080. You have to allow for spikes above and below critical areas on red days. So if you are positioned, I hope your leverage is low. Stops could be meaningless, okay? Because this is a day where the algos will play. So a couple of ideas going into it. I would think that we would get the stop hunt in the end, don't you? So we talked about it yesterday, and like Blake said, it may not be a stop hunt. It, could be a breakout. I'm leaning more towards a false breakout, but the only way I'll know it is after it takes out this area here. The 109.70, all these highs here. You'll know it's a false breakout once you get a candle, at least a 1 hour candle, closing back beneath it. Everyone with me on it? So don't think that it's going to be a false breakout until it becomes one. All right. So early in the week, I was talking about I wanted to get short at the 109 level, but it's not just a number. It's how a market gets to a level. And this wasn't the kind of day that we had after the Iran ballistic missile that I fade. Okay. So after this, I said, well, I'm not going to try and fade this until they clean out every last short here. And this should be it. Looking at S&Ps, and one of the great things of working with Blake and Steve and Stell here in Face is I get to see their work without having to do it because I'm a lazy guy. You guys know how lazy I am, right? So, I just glom off all the hard work of the team by seeing their work, just like you guys, you parasites. Anyway, hello, Monica. I noticed when Blake was talking about the scenario in the S&Ps and waiting for the trade deal to be signed and the golden ratio target above 3,300, and I'm sure he'll show it again. He had something at 3285. I think it was 1.27, another fib ratio extension here. And so far, we got there. We were at 3286. Well, hold on, Thomas. Will it go up? I'm just putting a little Windex on my crystal ball. Hold it. Let's see. I'm strongly neutral. I'm strongly neutral until the number. So this, I think, could be an inflection point to prove it. Steve has some areas where the dollar turns good. Let's see. The yen's been kind of the strength. Swiss still doesn't look that great to me. Okay. So if I want to look at something to short, against a dollar, it would be the Swiss. I mean, we're holding this 96.50. And actually, many, many, many weeks ago, we were talking about seeing the 96 handle when it was at par. But it's still possible that, this could have been a stop hunt. We took out all of the stops, but why not 95 if the dollar still has another wave to the downside? Windsor, I believe we have a screen. Why don't you log in or out?
Dale, it's not actually updating from what I can see. Good morning.
Huh? What?
I don't see the screen updating. I see a chart.
Oh, am I still on pause?
Yeah,
I'll
it looks
resume
like
share.
it's paused.
Oh my goodness.
Thank you.
All right. Well, thank you, Windsor. Thanks, guys. All right, so anyway, I showed this. We should complete this stop hunt here. And then the do or die in the euro here, 1080, at least intraday. It's trying. This looks like a little 1, 2, 3. I said your stops won't mean anything for a while. And then I pointed to the S&Ps, which at 3285, Blake had some fib extension. I'm sure he'll show it because he's looking for 1.618. Sometimes when everyone's looking for the same number, either never gets there, so toe in the water here prior. So, you could have a piece on before, just in case the number goes your way, but just a toe in the water. And I'm really surprised with yen strength, yields. We should have already had a breakout here with the yields. And, I thought it was going to roll over. Then I thought it was going to break out. And here's another thing, you don't know still. You could have a bias, but until we're under 175 or over 198, yields are, it's a guess. It's a bias. You could scalp into it, but the signals will happen under 175. I think we're going to make new lows in yields, and over 198, we're going to 210 to 230. So maybe this is the day we resolve this ascending triangle formation. And something else, so the last thing I want to wrap it with that could have implications for risk and the trade deal, it's USD yuan, and it's starting to get a little bit of a wedge look. Looks like it could trade 690, 689. Here's 1, 2, 3, and kind of a wedge here, something like this, right? So, or a channel, whatever technical analysts call this stuff. Okay, everyone see that? So, this has been going down since it looks like we have a trade deal and the market's been going up, right? So if this is something that ends up holding, get rid of this, and you look at the weekly, it still could be just consolidation, and there still could be another wave up to the upside. I remember Grega actually, what a great team. Actually had a wave count that took USD yuan above 720. What a team. Now I know the guys are going to announce it, but this is going to be your chance to join us. And I was thinking about this, and I was going to talk to the team about it Monday, but I'm going to bring it up here. I was going to talk to it during our meeting. But, of course, the research is elite. And for some people, maybe, they're just too busy during the day with their vocation. Hi, Amanda. They're just too busy with their vocation, and it serves them just to be to have this and get all the push alerts and everything. But someone yesterday asked Steve what books he should read and what's the best way to learn to be a new trader. To me, and that's what FACE is to some degree, the value of communities are priceless. Okay. And I think, in my opinion, just mine, that the most valuable aspect of Forex analytics is what we call members chat. Okay. The private members chat that I'm suggesting we rename to Forex Analytics Warrior Room. Okay. Because you have to be a warrior to do this. Okay. So there's no better way to learn than to watch professional traders doing it live and being there and having the option to ask questions. So not only the team, but all the guys in there, it's how they support their families. It's how they make their living. It's how they retire. So if you want to learn how to trade, you go into the Forex Analytics Warrior Room and you hang out there for 6-8 hours a day and you ask questions And who knows? I mean, there are a lot of people in there that might even help you, take you under their wing. You could make connections. That's what a community is for. It's about supporting each other. It's about being for each other. It's sharing knowledge with each other. So
And
I,
and
I just wanted to say, in my opinion, the community outside of Face as a subscriber is the best teaching method on the planet. And I'm not just saying our community, although, I am pretty objective because I've been around. Tough to find a collection of talent that we have in our private members chat. Okay, it's NFP, so I'm going to let Blake come in
all right.
so we can get
Thanks,
ready.
Coach. Hey, you
All
know
right,
what?
man.
I appreciate your kind words, and the our Forex analytics community is definitely where, well, that's where I'm sharing all my ideas and my thoughts. And speaking of which, I got, I scaled out of the Aussie Canadian. I did
Okay,
it
buddy.
last night as we spiked back up into the 70s. I exited because I'm
Nice
like,
trade.
I wanted to be able to sleep last night. And actually a couple of the guys took their Aussie Canadian off this morning
Uh-huh.
at higher levels, so really good trade there. And things like that we share. I did tweet it, but how we handled the trade is all shared in our community. So anyway, let's talk about non-farm payroll, because we have the dollar yen that's grinding up into really key resistance here. Now, let me start off by saying I'm going to give you my thoughts on NFP. We're probably going to get a decent number. I don't see this number deviating too far from expectations. Now, keep in mind, and this is via Bloomberg. This is my terminal here. So when you're talking about, the NFP number, the survey is 160,000. Prior, remember, was an outsized 266,000. Now, the risk to this number this month is that last month was an outsized number. We had a big beat. We could have a low number today, a lower number today after last month's outsized beat. I'm hoping so. And let me tell you the reason why. Um, I'm hoping that we get a lower number because it's going to create some volatility. And that's what, for me and you at home, that's what we're looking for, is we're looking for some volatility. So I hope we have a miss, because what I fear is the number is probably going to be a fairly inline number. Let's just say 120, 150, 160,000 jobs we're going to create. All for argument's sake, let's just say everything else stays the same, but the headline number is somewhere around around the expectations. If that's the case, the dollar is probably going to continue to grind higher, and that's a reality. And if you look at the dollar yen, and I've talked a lot about this the last couple of days, we did a false breakdown. Now here we are pushing up against highs. And if you guys are not aware, the big triangle, multi-year triangle resistance is up here at 110. And 110 and change. You can say roughly 110.20, 110.30, somewhere in that neighborhood. If you don't know what's happening next week we have the signing of the phase one trade deal, the U.S. China trade deal. So my thesis is that we're going to trade up towards 110, 110.20, either today or early next week ahead of the trade deal. How we respond from up here is more of what I think is going to happen. So let's say we have a weak number. I hope that we have a weak number just from a volatility standpoint. Let's say we do. I think the dollar yen, you want to be a buyer on dips, frankly. And yes, you could short it here if you want. Let's just say today this is the peak, and we drop down to like the 38% retracement down to 109. This would probably be a level that you want to be a buyer, because like I said, next week I think we're going here. So if we drop like that, I think that, and if you guys are shorting the dollar yen, think about that too. Think about what's happening next week. Next week, it is going to be the formal, as far as we know, the formal signing of the U.S.-China trade deal. So chances are we're gonna be heading higher going into that. So you probably want to be a buyer on dips. The other thing that you have to also think about. Let me remove this really quick. I'm just going to remove these numbers. And then we'll talk about the Canadian number. So shoot, where did my mail go? Damn it. Give me 1 second. Where is my mail? Here it is. Okay. So this is the big options expirations that are happening for today, at the New York cut, which is at 10 a.m. All right. So you'll notice that there's 838 million euro dollar expiring at 111. That sucks. That means that the euro dollar is probably going to be stuck around the 111 level. I mean, in all actuality, that's probably a realistic expectation here. Oops, that's not what I wanted. Hold on. There it is. Okay, minimize that. The dollar yen. All right. What's the closest expiration to where we're at? Well, we have a 1.2 billion at 110.20. So somebody's betting on the fact that we're going to have a good number and we're going to blow past 110, and that's a big option expiring up there. So wouldn't be surprised if we try to drift up there, especially following a good number, around the 110.20 level. All right, it's a big expiration. 1.2 billion. So just think about these things as we head into today's non-farm payroll. Like I said, I think today's number is going to be fairly benign, which is just going to allow the dollar to continue to grind higher. And the euro may not go very far, because you might see euro yen, pound yen, Aussie yen go up. But the dollar yen, I think, is the one that's really at risk of making a move here. Now, again, let's all cross our fingers and let's just hope that we have a really poor number, because if that does, it kind of changes the landscape of everything. The dollar yen would back away like this. The euro dollar would probably, rally back up towards 111.40, and then you'll give something for dollar bears to really think about. And like I said, it'll create volatility. I think the opportunity for more volatility today is with a weaker number. Now, let me say one last thing before I talk about the dollar Canadian, is that I'm pretty bad at forecasting non-farm payroll. I am, admittedly, and I am happy to admit that. I think it's kind of a crapshoot anyway. So the trying to guess where non-farm payroll is going to lie, is where it's going to land, is I think it's kind of foolish. However, what that probably would tell you is that being not very good at forecasting non-farm payroll probably would also let you know that maybe we do get some volatility today, because I'm not expecting it. I'm not expecting it. So maybe we do get some volatility. All right. So now let's talk about the dollar Canadian, because the dollar Canadian has been a very interesting animal. And we talked Monday on this webinar, or maybe it was Tuesday. I believe it was Monday, because this didn't happen till Monday morning or Tuesday morning. Monday morning, if I'm not mistaken, we talked about the dollar Canadian rallying out of this wedge, rallying up towards 130 and a half, 131, backing off ahead of non-farm payroll. I think I drew it for you exactly like this before it happened. And I said the best thing you could expect with the dollar Canadian is getting short up here and kind of holding it into non-farm payroll, and then you have a decent position. Slightly profitable if you were either short from up here or you were long from down here. You're in a nice profitable position to take it into this number, because the number is obviously you got two legs to the number, not just non-farm, you've got Canadian jobs as well. In the event that we have a strong US number and a weak Canadian number, this dollar Canadian is at risk of breaking higher. It's at risk of breaking through this 131 and 131.10 or whatever. And then we're at risk of actually, doing a longer term false breakdown. That is a big risk right now for the dollar Canadian. That's something to think about. I have no Canadian exposure. I was long Aussie Canadian, the last couple of days, made some pretty good money with that. And now I'm sidelined with the Canadian. I actually did short the dollar Canadian yesterday at 130.96. And I think I closed it at like 88 for, a few pips. And it was like nothing big. I just was like, oh, I'll just fade that as, I didn't stick around long. But anyway, I think the dollar Canadian is at risk of some higher volatility because of the dual employment reports that are coming out. The flip side to that is, if we have a weak U.S. number and a strong Canadian number, you're probably going to be, well, first of all, you probably dip down here, and then somewhere around the 30-40 level, it's going to be a decision whether you break lower or you reverse, because if it is a weak number and the stock market acts negatively, we could actually see the dollar Canadian reverse course. So you got to be a little careful with that. Like I said, I'm leaving the dollar Canadian alone today, unless for some reason we blow past 131. I think some stops are going to be triggered there. I might be interested for 10, 15, 20 pips, on a squeeze. But other than that, I'm pretty much sidelined with those. But like I said, I do believe that today's number is going to be, fairly benign. I don't think we're going to get a lot of volatility. I think it's going to be pretty much in line. But the best case scenario that you and I can ask for as traders is going to be a weaker number, because I think a weaker number will bring out the volatility. Because it will then spur the idea amongst the investment community that, holy cow, the market, the economy is really starting to slow here. And, what if the China-US trade deal really, ends up being a non-event? We've priced it all in, and, China doesn't live up to its expectations. Then you start getting question marks in the economy, and then you might start to see a little bit more volatility as a result. But for right now, as it stands, probably going to get an inline number. Probably an inline number to maybe a slight miss, and that might lead the dollar yen to do something like this, and then right back up into highs. So that's what I'm thinking. Coach, did you have anything to add from there? And I would say no. All right. And Stelios, do you have anything to add from there? Hey, good morning, Stelios. Steve.
Hey.
I couldn't get my mouse over to unmute myself in time.
Yeah, I have a hard time getting my mouse to do whatever I want it to do.
That darn mouse.
And,
I don't have problems like that. I have two cats.
Is that what we call it now, the mouse?
yeah, we're calling it a mouse. I mean, you
we're
call
at
you call
Disney.
it pocket pinball. I call it, so
I couldn't do the cursor technique without a mouse.
right. So anyway, I just want to say good morning, guys. I want to say good luck to everybody today for non-farm payroll. That's my quick view of non-farm. And one of the other things, I think the Aussie had strong retail sales numbers. That's when I took my Aussie Canadian off, is after the print. You notice the Aussie's holding up really well. And I have to say this once again, Aussie has not sold off. When it didn't sell off when we have this, the missile strike and yada yada yada. The data, between the trade balance and the retail sales this week, pretty good data. Everybody's more concerned about the fires, obviously. And it's going to take a couple of weeks to look at the damage and go, then the market will start saying, well, in Australia, they're gonna get so much, they're gonna get so much in stimulus and it's gonna take this much to build, back this, and we're gonna see a little bit more fiscal fiscal liquidity as a result, and it's going to add this much to GDP. And then I think you're going to start to see the Aussie ramp up in the next, couple of weeks. But the Aussie is, I think, building a pretty good base. So it's something to think about. All right. Steve Stelios, I'm sorry, I didn't mean to cut you guys off. So
No
what are your
problem.
thoughts here? You got a few minutes to talk before I'm going to be letting you guys go here in a couple minutes and turn it over to my colleagues. But what are you guys thinking ahead of NFP?
I am in the same camp as you. I think it's going to be middle of the road number. I think it's probably going to, it might be on the weak side. We had a big print last month. So I think I wrote in the chat room, my prediction is for 129. Anyway, for whatever that's
and
worth.
you know what, that's pretty reasonable. I don't think that's too, and it's not enough to jar
Yes.
anyone. And the Fed will go, well, we got to continue to monitor the situation and blah blah blah, and they're not going to, everything stays the same then.
Yeah.
It's when you get a really weak print, right? Like, let's say we only create 60,000 jobs, then people go, whoa, what just happened?
Yeah, and people tend to look at the 3-month rolling average, right? You want to smooth out the outliers. One other thing I'm going to be looking at is average hourly earnings. That's always pretty important. It's estimated to be in line at 3.1, unchanged at 3.1% year on year. But yeah, I don't think, well, famous last words, but I don't think it's going to be a huge number either way. I don't know what Steve thinks, if he's here.
I'm here. I have no opinion.
Steve has his telescope out looking for the lunar eclipse, which happens tonight. Steve Galileo Vulgi.
I actually.
Is there a lunar eclipse tonight, Dale?
Yeah.
There is?
Yeah.
Oh, crap.
So put on a little Pink Floyd, Dark Side of the Moon.
I actually do
have
a drink,
Dancing with
a
the
doobie. Huh?
I actually do have a telescope in my balcony. Just
well, we know why you have that.
Yeah,
and it's not for eclipses, okay?
No, it's because of patience.
Hey guys, I just want to say that really quick, our new pricing goes in
on Monday.
for the new year. It goes in when?
On Monday morning.
On Monday?
So they should be getting ready for that.
Yeah, get ready for that. And remember, if you want to try out Forex Analytics ahead of the pricing, take advantage of it this today or the next couple of days, because once the new pricing, well, the New Year special goes into effect for a week or 10 days or however long we run it, you won't be able to try out Forex Analytics for $1. You'll just get the really good price. So anyway, guys, have a great one. TGIF. I will not see you on
the Blake.
There's no daily roundup webinar today. So good luck, and thanks everybody for tuning in.
Have a great weekend. Good luck, Blake.
You do the same.
Thank you, Blake.
Thank you, Blake.
So I think it's probably worth putting dollar CAD on, as we have employment data out of Canada.
Let me share the screen, Stelio.
Yes, sir. We have unemployment US, of our payrolls and average
earnings. I'll pull here the USD CAD. There it is.
And USD CAD 130 is a pretty big level, and it's been oscillating around that in the last few days. So I think it's going to make a decision at some point.
And here's the data flash.
Either it's going to stick above or it's going to crash below, but let's see.
So yeah, we have potentially market moving data. There is no question about it. Now, yeah, I wouldn't expect a very good number this month as well. But making predictions, especially in something that we know is so volatile, and we know that it can even be reassessed. We know that we're going to have a correction to whatever number we get today, and sometimes those are like big. So we don't even know if we can celebrate or cry over a bad, celebrate a good number or cry over a bad number. But it is what it is. The market is going to react to what we get today, irrespective of how reliable it is. So yeah, I would also favor something that would be weak, because indeed it has the potential of creating more volatility. Now, having to do with the dollar, I'm paying close attention to this confluence of resistances at 97.70, 97.75. So we're very near resistance. That would also bode well, with getting a good, a weak number.
Something in my memory, 9780 sounds real familiar, that it was critical before the top.
Yeah, it has been multiple times support
Okay.
resistance.
Yeah.
Also, there we go. So
145,
145
yep.
average hourly earnings quite weak, Stelio.
Yes, yes.
A
That's
lot weaker than
unexpected. And
expected.
Canadian numbers better than expected. So I'm guessing
Check
CAD.
manufacturing payrolls.
Oh yeah. Well, revision was higher, so I think that's probably a non-event. The revision on non-farm payrolls from last month slightly lower as well.
Dollar's
Canadian
weakening.
employment
Yeah, yes,
stronger.
the CAD is
Canadian
dropping, isn't it?
unemployment rate went down by 0.2.
Participation rate went down by 0.2 as well, though, for Canada. So that kind of explains it.
Yeah.
Okay.
Metals
So
are coming back. Dollar is
dollar
weakening a
is
bit.
the dollar against the Canadian definitely is taking a hit here, and no coincidence. I was talking yesterday about this channel potentially acting in this case as a resistance after retesting it. So it was a good risk reward opportunity. And as you see, we poked above this channel, but didn't manage to close above it both yesterday and today. And now we might be getting ejected from it. Anyhow, from a risk reward perspective, it was an interesting play. USD
Yen
yen,
didn't take the stops out yet.
yeah, the DXY, as you see, getting rejected from the bottom of this horizontal resistance area. So so far so good. If you wanted to be short against that, Euro USD is rebounding once again from the 110.80 area. Same deal here with 130 acting as support for the cable. The Aussie is also rebounding because all of those pairs were actually at interesting junctures. The Aussie is rebounding so far after retesting these broken channels, trend line resistance as support. So let's see what the metals are doing. There it is. Gold holding this 1550 area, silver holding this 1770, 1780 area. So let's see if we can get some follow through. So far, the dollar is weakening, and several pairs are rebounding against it from important areas. Now, having to do with risk. The S&P is currently testing the 127% extension of this latest pullback that we had, the one that started at the very beginning of the year and bottomed out with the Iranian news that night when we had like a -2% overnight price action. So we are the 127% extension. Let's see if we can stall here. If not, we have a very nice confluence of 161.8% extensions. One is the short-term pullback that I was just talking about, and the other one is the long-term pullback, the one that we had in September of 2018 until the end of the year of 2018. That's the 161.8 confluencing with the short-term pullback, both of them roughly at 33.17. So that's the next area of resistance, which is not that far away anymore. I mean, we're like 35 handles away, which the market can even do in a single day, in a single decent day. So this market is overdone in the short term. There's no question, but that doesn't mean that it's going to reverse today. From a risk reward perspective, though, against that confluence at 161.8, it looks like a decent possibility to play a pullback. The VIX, keep in mind, is still diverging. I mean, we keep hitting new highs. The VIX is keep producing higher lows. So far, the VIX is at, what is it now? Like 12.4. And as you see, that's a higher level than even the recent lows that we had. So You know, the market is quite complacent as well. There's no question about it. Yesterday's DSI, by the way, let me pull it up. Yesterday's DSI is, you can see it here, 90, both for the Nasdaq and the S&P, and having to do with volatility index, the DXY there is at 7. So like that's a very, very, very low number. So, you know, anything that's above 90 or 90 and above or below 10 is an extreme number. So, you know, from this perspective, from the DSI perspective, things are very, very overdone as well. We know that the same applies, of course, for any kind of momentum indicators you can look at. I mean, and we still have some RSI divergences as well. I mean, from the daily and above, you see plenty of divergences. Here is the RSI divergence of the daily. Here's the RSI diverging on the weekly. You can see that in this, you know, during that high, we were at 91, 92, and we're currently at like 80. So, you know, there is a big RSI divergence also on the weekly, and, you know, the same deal applies to the monthly. So far, the move higher has been, in essence, you know, a one-way street. I mean, since the end of September and the low that we had in the end of September, we've had a rally that's moved the needle by, what is it now? Like 15%. So we're 15% higher since the very, very end of September. So, you know, too far, too fast. And another thing that I always pay attention to is this Andrews pitchfork that I've kept on my charts for years. Every time we've gone above the 100% extension, and this is going to be the second time only in all those years of this bull trend that we're going to be touching the 200% extension. We've seen sharp pullbacks. Last time, the only time actually in this run that we've tested the 200% extension was at the very beginning of 2018, when we had that euphoria, you know, that euphoria move, you know, before we corrected lower. And, you know, this is going to be the second time. So, you know, it makes no sense to be long anymore in the short term, right? I mean, you know, you want to be bullish, you would still be taking like a very, very bad position by being long here. If you were
What
bullish,
would you, as Steve, excuse me, what would you need to add to a short position?
oh, you know, I only have
I know you
2/3.
already have some. What would you need to add?
Either a test of the 3317 confluence of resistances.
Okay.
That's where I'm adding. Or alternatively, I want to see a breakdown below 3260 with some momentum, and especially 3200. So 3200.
I see. Oh yeah, 3200 is huge.
Yeah.
Okay.
And then
Thank you,
I will be looking for a deeper pullback. Now,
Can I just address the community for a second? I see a lot of questions like this,
absolutely.
Steve. Okay, I see a lot of questions. Dale, are you still short this? Are you still long this? Blake, where you were are you still short? Are you long? You know what? First of all, I used to be concerned a lot, you know, what's everyone else doing? Now I just have enough trouble keeping track of what I'm doing. Okay, focus on what you're doing. And the other thing is, if it's important enough for you to know these things, what I talked about earlier, don't you think it's worth $100 or so to pick Blake's brain 20 days a week in members chat? And then you can ask, and then you could know what he's doing 90% of the time. You know, sometimes he's not in there. He's, you know, at a soccer game and trading, but he checks in. And that's just Blake. Okay. How about, you know, you want to know what Amanda's doing? You want to know what a lot of the pros in the room are doing? So that's my comment for people that are, focused on what other people are doing. First of all, pay attention to what you're doing. And then if it's really important for you to know these things, you're not going to know them in face, but you will know them every day being in the warrior room. So that's it, Steve.
Thank you, Coach. So yeah, Nasdaq.
So stop asking. It's starting to piss me off.
So the Nasdaq is even more overdone. Even if you look at specific stocks, I mean, just look at Apple.
It's 9% of the S&P, I think now.
Yeah, I mean, just look at Apple. This move, this last leg of the move higher. I mean, since the end of the corrective move at the beginning of 2019 until now. Keep in mind that since this low here, when Apple was trading at 141, Apple hasn't increased its earnings. So all this move from 140 to 310 is multiples expansion, as simple as that. So, it's too much for the time being. I mean, Apple is a good example. It has now overthrown this ascending trend line as well. I mean, it's too much. Everything needs, even during a bull market, even if during a very bullish market, you need to have some pullbacks for the market to be, healthier. And this market is in a big need for a pullback. And I think it's going to happen within this month. So I don't believe. I don't believe that we can go through this month in this space. Just to give you an idea, if you just put a linear regression line on the move we've seen so far, since this low that we had in December, that would point, just to give you an idea of unsustainable momentum, that would point that if we were to follow this type of momentum for the rest of the year, we would need to see an end year S&P target of roughly 4,500. So, I mean,
that's next year after the correction, maybe.
Yeah. So, I mean, do you believe that S&P can climb
Trump's re-election?
Yeah. So do you believe S&P can climb in the 11th year of this expansion by 50%? Okay.
Look at the champion, Steve, Microsoft.
Be my guest, but personally, I don't think so. So here's Microsoft. Has overthrown this ascending wedge.
And look at that divergence.
Oh, yeah.
This is the first divergence that we're getting on this wave that's glaring.
And if you want
I teach, Steve, that if you have to go to the RSI reading with your cursor, it doesn't count. But when you look at what it was doing on your last chart, it was pretty glaring.
Just look at the weekly.
Yeah, wow.
I mean,
I'm only looking for a pullback to maybe the breakout 142 from when we peaked, but that's a big trade in indexes.
Yeah, I mean, everything is like,
yeah,
everything has gone parabolic. By the way, the DAX is also at a confluence of resistances. I was also monitoring this. We have this ascending channel. We're at resistance. It's also the 127% extension. We do see some RSI divergence since November, actually. So this is an ongoing. You can call this a 3-drive, Coach, right? 1, 2, 3, right?
Yeah. And sometimes the third is a fractal. But
and can be 3. In the third. Right. Yeah, okay. So, as you see, the vast majority of the indices are more or less showing the same thing, that, they still remain very well bid, but momentum is clearly waning, and we have, plenty of divergences. I mean, in indicators, in the VIX, you name it. So, I think, I feel very, very comfortable being short at the moment. Let me say it like that. But that's my personal point of view and personal preference and tolerance. I mean, I understand if people don't want to fade this, I totally understand. I mean, you want to follow the trend, do it. But if you're long, fine. If you're not long, don't buy it here. I mean, as simple as that.
Wow, I've never been called bearish incompetence. I'm not even sure what it means. Pete,
Yeah,
do you know what that could mean?
Not sure what he means about
And he
Steve.
agrees
This is
with my
very bad number for
incompetence.
risk. It is too weak to sustain current momentum and not weak enough for change in Fed stance. Yeah, Gautam, I get what you're talking about, but personally, I don't pay so much attention to how it's going to affect the Fed, because I think that the Fed frequently the Fed very frequently will try to find reasons to justify its monetary policy, while they're just excuses, right?
Screw the Fed.
Yeah, so they're just excuses. I do believe that the Fed is in a specific set path, and I do believe they will continue easing no matter what happens with everyday data. I mean, we've already seen a clear slow trend in data worsening. I mean, plenty of leading indicators are showing weakness despite so much accommodation coming through the market globally. So I do think that the Fed has only two modes at the moment. One is neutral, which they will stay at neutral for periods, and the other one is like super dovish. So they will spend some period being neutral, then they will turn super dovish. But do I believe that they're going to turn hawkish again? Do I believe that they're going to be hiking again rates during this business cycle? No, I don't believe so. I believe that the next move is going to be lower once again, and the next move is going to be making QE official. I mean, we currently have like the no QE. I believe that sooner or later we're also going to have official quantitative easing. Of course, they're not going to name it quantitative easing. I've explained multiple times on this webinar in advance why they wouldn't name quantitative easing, as they didn't initially name it 11 years ago, debt monetizations, which is exactly what it was. Now they won't name it quantitative easing because the name is tainted. So they're going to name it something else, or they're not going to give it a name at all. But the substance will remain the same, right?
Opioid injections.
Oh, absolutely.
Opium.
Actually, something. The example is a very good one. It's a very valid one, Dale, because in this case,
I know I'm withdrawing.
Yeah, in this case, we have exactly this type of situation, which is what we have an economy. We have economies globally that have been in a sustained zombie recovery, based mostly on opioids, as you call them in this case. Now, the doctors, central banks, know that the patient is going to go through severe withdrawal symptoms once they try to cut the patient off the drugs, as we saw it happen when, I remind you that exactly 13 months ago, the Fed Powell was declaring, in essence, victory by saying that they will continue hiking, they will continue shrinking the balance sheet, and
then we seized up.
Literally 10 days later, he had to completely reverse course because he realized that the patient would go, in seizure mode. If that was the case.
Seized up. Yeah.
Yeah, exactly. So
bastard doctors.
Yeah, so we have doctors that want to satisfy the patient. The patient currently prefers to stay under the influence. The problem is that the body creates tolerance to drugs. So the problem is that to get the same high, you need more and more of the drugs administered, and at some point, you'll need to administer such a high dosage that you're actually going to kill the patient, and nobody wants to take responsibility for that. So I believe we're going to keep on giving more drugs to the patient until the dosage becomes lethal, and then it's like the music chairs. Whoever is, in command at that point, both in the Fed and presidency or whatever, is going to have to take big part of the blame. The blame, of course, is gonna be shared among those that
All the
were
juice meisters,
those that were in
starting
charge
with
for
Bernanke.
during the past couple of decades, both having to do with politicians and the Fed. Unfortunately, the Fed is in a huge extent responsible, because the Fed is in essence, and central banks in general are in essence making it possible for politicians to not do the right political thing, because they have the Fed bailing them out. So if the Fed wasn't so irresponsible, the politicians would be unable to be so irresponsible.
You're too young, but do you remember Steppenwolf's tune, Goddamn the Pusher Man?
No.
All right, we'll play it later. It's apropos.
Okay.
All right. Steppenwolf.
Okay, so
I know Ziggy knows it.
Dollar is so strong. I'm telling you, all those days, don't short it if you want to make money. Dollar is not so strong. Dollar hasn't been that strong. In essence, the dollar hasn't been that. I mean, we topped out in the dollar in 1st of October. And so far, since the 1st of October, we haven't produced a higher high. And we won't until we break through 97.70, right? So I don't know where you see the strong dollar. It is holding up quite nicely still. There's no question about it. And it might push higher from here. Yeah, sure, it might. But, since the 1st of October, the dollar has been anything but strong, right? It has been rather weak, not extremely weak. There's no question about it. But it has been rather weak. And even the recovery of the dollar since we had the low in 2018 hasn't been that strong either, right? And not to mention that the dollar, unfortunately, this doesn't go back too much in time. Not to mention that the dollar is in a multi-decade downtrend, right? So can the dollar break higher from there and push higher? Sure it can. Sure it can. I mean, it hasn't sold off impulsively yet. There's no question about it. But looking at the short-term picture, the dollar is not strong. Looking at the very long-term picture, the dollar is extremely weak. Looking at the medium-term picture, yeah, since like a couple of years ago, the dollar is very well bid. Do I believe this is the main trend? No, it isn't. So in the meantime, as I said, you want to know the direction of the dollar. Watch 97.70, 97.80, because a break higher from there, yes, should indicate that we're going to see more strength in the weeks ahead. On the other hand, watch this low at 96.40. A break below should indicate more weakness. Until then, I maintain more or less a neutral to bearish bias, but mostly neutral. I mean, I've been shorting the dollar only against them. So far, I've shorted it only against the metals and against the NOK, which the NOK has overperformed the dollar by a lot. So, yeah, I'm not saying, and I'm not advocating, and I'm not taking positions being short the dollar across the board in no case. But do I have a very a very good reason to also advocate the opposite? No, absolutely not. Mm-hmm. Also, this analysis have no. Thank you, but see breaking 111 now again. You mean in the euro? Yeah, above 110.80 in the euro. I mean, from a risk reward perspective, it makes sense if you want to be long the euro. 110.80 is an important pivot here, right? So, we're close to 110.80. So from a risk reward perspective, the balance would favor longs here. Now, below 110.80, Yeah, sure. I mean, we should see more weakness in the Euro USD, in which case the DXY should get well bid. It's not anyhow by accident the fact that, 97.70 is as far away as 110.80 is in the Euro USD, because those two in a big extent are inversely correlated, right? So if the Euro USD goes breaking through 110.80, at the same time the DXY is probably going to breaking through 97.70, 97.80, and yes, in that case we should be looking for more dollar strength. My point was that Sponge is trying to get free trade advice. Them asking if you guys are bearish. Yeah, I said occasionally, and it's straight out pleasure to pick out great technical informations on my own ideas, and that's exactly what you should be doing, Pete. Indeed, I mean, people should be. I mean, we have patterns in play, for example, and patterns in play have been doing, extremely well since we started doing this. We know that some people are trading those patterns in play, which is, fine if that's what you want to do. But, the best thing you can do is, and I think that our long-term members, that's what they're doing, and people that have been longer in the market, is that, they like to share ideas in the community. They like to take some ideas from the community. They like to give back some ideas to the community, but they end up trading what also aligns with their own beliefs, right? So I'm totally with you there. I mean, you should have your own point of view in the markets, and when you see that we strongly believe that that's the right direction, that should just give you, I mean, even more of a confirmation to be able to trade that idea perhaps with a little bit more leverage, or with more confidence, or adjusting your money management accordingly. But yeah, that's what ideally would we want people to be doing, right? um Now let me go through some of the questions. There is a question about the Aussie Kiwi. We warned the day before yesterday that the Aussie Kiwi might be rebounding after putting in a new low, and uh, this has been the case so far. Now, the next question is, how long can this rebound extend to? And the answer is, the first area I would be looking for is a retest of this broken channel, the big one here, the purple one. That would more or less indicate a move towards 1045. That would be the first area of resistance I would be looking for. And if we manage to actually go above that, I would be looking for 1052 next. But I would have to say that I think that this rebound should probably produce a very decent selling opportunity eventually, sooner rather than later. So I'm viewing this rebound as corrective until proven otherwise. Okay. Now, another question having to do with the Kiwi. We already saw that the Aussie is rebounding from, retesting the broken channel. The Kiwi, this is the trend line I was looking for it to retest, and so far it has moved perfectly lower towards that area. I also like the way it has been moving lower. I mean, it's, it is decently orderly. So it is getting closer to an area that, would make sense to attempt to buy it. I mean, anywhere, I guess, between here and worst case scenario, like 65 cents, I think is a decent opportunity to try the upside once again. So, that's what I think about that. Mhm. VIX high for 2020. What do you guys think? Asks Glenn. You mean, Glenn, to predict what kind of high we're going to see in the VIX in the year that has just started? Okay,
60.
listen, if we go back to the high of 2018, that was, the spike that we had at the beginning, which was at 50. But during 2019, the highest high we had was like something like 36. So, I think it's a time for a higher high once again. So, we then had a high at 25. So I do think that we're going to see spikes during 2020, even if this is not the year that the bear market begins.
And you won that free dinner. What did you have?
Oh, we haven't met yet with, I mean,
Oh.
he lives in London, I live in Athens.
Oh.
So, you know, when I go to London next, or when he visits again, because he has visited also,
Yeah.
you know, I'm going to decide. But I am a fan of Italian food, so probably my suggestion is going to be that.
Also buco.
Yeah, why not? Absolutely.
Yeah. All right.
Absolutely.
That's pretty expensive. Order's the most expensive dish.
Nah, I'm going to order, you know, what my appetite tells me to do that day.
Come on, rub it in.
Yeah,
Okay.
no reason.
All
I
right.
mean, Ures
And like
is,
a real expensive bottle of champagne.
Ures is a great trader.
I'm kidding you.
I happen to get
Anyway,
this,
it was like a Duke,
this one right. Yeah.
a Trading Places bet. You know,
Yeah.
the Duke brothers.
Oh yeah,
Yeah.
I was actually watching.
Trading
I guess
Places.
replays of the Duke's brothers when I
Yeah.
was in elementary school, because you know the television was playing them
Yeah.
here, so I used to watch them, and you know, for a little child they were actually quite pleasant
Yeah.
to watch, no question about it.
All right. Well, Norm's here
Um,
if you're done.
Selling USD yen here, great opportunity. Let me go through that. Yeah, and then we can start. Now, having to do with the USD yen, we already said before this started that the USD yen was and is at resistance, 109.70. I mean, we haven't managed to penetrate through that level, as I was saying, since the end of May of last year. So, and you know, just above at 110.40, we have that long-term descending trend line.
Like
So
that.
so from a risk reward perspective, it makes sense, right? It makes sense. I mean, I can't blame you for wanting to short it here. I mean, you can risk very few pips to potentially see another move towards 108. So you know, combine that with what we've said, that you know, in the short term, we've now accumulated several divergences and very extreme readings in anything that has to do with sentiment in the indices. And yeah, I think it's a decent opportunity, but as you know, my preference is to stay away from the USD yen, simply because it's very tedious. So I'd rather be short the indices here than, you know, try to short the USD yen, which, you know, we might even see indices dumping lower and the USD yen having a mild reaction to it, because in general it hasn't been reacting that vividly for quite some time. I mean, it hasn't been strongly following yields, it hasn't been strongly following risk. It has more or less been on its own world, right? So
It's an enigma.
yeah, it is.
You like that? I
somewhat
knew
of
he,
an-
is that a Greek word?
Yeah, it is enigma. Yes.
You know, all the words I like are Greek. I'm going to have to move there.
You should do that, actually. I've told you before.
Anyway.
Speaking of that, you know that the Germans called the you
Oh,
know,
yeah.
the enigma machines,
crypto.
right? Yeah, the crypto,
See,
which
everyone
actually
borrows. Huh?
which actually were magnificent. I mean, the only way they managed to
Crack the
break
code.
the code was
Yeah.
when they actually managed to capture a submarine
Yeah.
which had a unit in it.
Right.
They didn't
They,
manage to sink it on
what
time.
they
And
call that, reverse engineering.
yes, and they had to reverse engineer it and then managed to crack the.
That's how we won the war. I think that was one of the biggest things.
It played a role.
Yeah, I mean, look,
It played a role.
knowing what moves people are going to make before they make them, pretty good edge.
Yeah, it played a role. Yes.
So that's
sure.
what, you know, that's what you would get in our members chat, knowing what moves we're going to make before we make them.
Or how the Nazis were using enigma machines.
Yeah. Anyway, have a great weekend, partner.
Have a great weekend.
All right, Norm. This is your kind of day, Norm. I think today is a lunar eclipse, buddy. Moon Man. Well, we're going to find out. Looking forward to talking to you again. So I'm unmuting you now. Hello, Norm. How are you, buddy? You're unmuted. I don't know if you opened up your mic. Hello, Norm.
Oh, yeah, I see him here, and you
Yeah,
have
he's
indeed
here.
unmuted him. And he has used Zoom multiple
Yeah,
times
he's been
before.
here before.
Yeah, so I mean,
Oh, I know why he's not in. He wants to hear this. When the earth is in the seventh sign and Jupiter aligns with Mars, then peace will reign the planet. How's that, Norm? We're not in the age of Aquarius anymore.
wasn't enough to get him unmuted, from what it
Oh,
seems.
gosh. Is he Skyping me or anything? Where are you, buddy? You didn't go back to sleep?
S-
Norm? How about this? This might
The only time that Norm managed to stay quiet is the day that we have a lunar eclipse.
Yeah.
That's quite interesting.
Yeah. How about this, Norm? Hava Nagila, Hava Nagila, Hava Nagila, ye Miss Mara.
Is
Or
that
this, Norm?
is
If
that
I
Jewish?
were a rich man, yava vava viva vava vava viva viva bum. All day long I'd pity pity pum. Yiddle diddle deedle diddle dum. Gosh, I give up. If I were a rich man.
Oh, Glenn had more questions which I hadn't seen. Okay, let me cover
Right.
those as long as
Norm.
we see what. So one question was Euro Yen. So Euro Yen is still holding this ascending channel, held perfectly support. Regardless, 122.50 has rejected price multiple times in the past or acted as support. So, you know, watch 122.50 as resistance. We also still have RSI divergence ongoing. And then you had another question which has to do with CAD Swiss. Actually,
Hello.
Oh, there
Hey,
he figured it out.
there he is.
He was waiting for us to unmute him.
Well, well, can you hear me now?
Yeah, we can.
All right. Well, the
You're-
problem was the default setting is not compatible with my setup. You know,
Oh, okay.
so I had to find the microphone setting and change.
Well, you know, it's the strange energy of a lunar eclipse, possibly. Huh?
There you go. All right. Well, would you like to introduce me, or should I introduce
Yeah,
myself?
I'll introduce you.
Okay.
This is one of the masters of planetary work who's been doing it as long or longer than me, specializing in the planets for the predicting and trading of markets, has a wealth of knowledge. If that's your area of interest, you couldn't find a better guy. How about that?
Okay.
Oh, and he also used to be a floor trader at the SIBO.
Okay.
And he lives in Naples, Florida, not Italy. And he's a great teacher.
Thank you. I'd like to add that I've been doing this, studying the market since I was 15, and I'm 68 now. And I was on the CBOE and the Chicago Board of Trade over a 12-year period from the 70s and the 80s. And when I landed there, I was invested in college successfully, and was able to. I stumbled on buying a membership on the fledgling Chicago Board Options Exchange in 1975.
You stumbled.
25
Were you at the sign of the trader before you went in the building with all the
I-
other guys stumbling back on the floor?
I never was
It was a
inebriated.
bar.
My money was important to me, so I never traded inebriated.
Okay.
All right. I might go for a beer afterwards, but that
all
was
right.
it.
Let me ask you this: after all this time, do you finally have the hang of it?
No, this is like anything. You never you'll never reach perfection. You can try.
Yeah, it's a good goal. All right.
Yeah.
So now we want you to share your screen, bro. So that little green box. Share.
Oh yeah. I'm going to share my screen. Hopefully it'll work now.
It'll work.
There,
Here it
can you see
comes.
my notes now?
It's coming up. Yep. Got you, Norm.
Okay.
Take it away.
All righty. So here's my notes now. Hopefully you all can see those.
Yeah, and we see the March Coffee
And we
daily
get
chart.
this is a huge window we're in here now. The next actually started yesterday and into the day and into the weekend. Probably maybe the biggest window I've seen in a long time.
Is tonight the lunar eclipse, Norm?
No, this afternoon.
This afternoon. Okay.
2:22 p.m. Eastern time.
Oh, okay. So before the NYSE closed. Okay.
Yep, exactly.
All
All
right.
right,
go
well,
ahead,
I'm just gonna go back one step here, back to the last window. That's an important window where we had a solar eclipse. There's solar.
Yeah.
We're in the eclipse season. And twice a year, you have an eclipse season where you have a solar eclipse and a lunar eclipse. They're like pairs. Solar eclipse is a special kind of new moon. Lunar eclipse is a special kind of full moon. The Earth, the Sun, and the Moon all line up for the solar eclipse. That was back on the wee hours of December 26th. Then we had the Earth get between the Moon and the Sun, and then I'm sorry, it's the other way around. The Moon gets between the Earth and the Sun and blocks out the Sun, so that's why the Sun disappears. All right, so there you go. So then back on the 26th, we're going to look at what the markets did. Generally speaking, we have the grains, financials, precious metals. There we go. Financials, grains, precious metals, stocks, and in this case, because it landed in the sign Capricorn, we'll be looking at coffee. Okay, so here's my charts. Here's the coffee chart. You can see we traded into a nice little wedgie apex there right on the 26th, and then it broke out of there. That's not unusual if you have a triangle or wedge, that it comes to the apex at the key date. Okay, and then we broke out, and you had a chance to make a little bit of money there on the upside. It wasn't fantastic, but not all of them are. And every now and then it doesn't work too.
And you're looking for a low here in this time window?
Well, I'm going to be talking about the future
Oh,
here
okay.
at the end of this. Okay. So here we go. Now we're going to be looking at what the markets did back on December 26th. Look at that. Look at the copper. Nailed the top on the copper.
That was a good one.
Okay. Pretty nice, huh?
Yeah.
On the corn, here's one of my principles. It's called Newton's Law. For every action, there's an opposite equal reaction. The bigger the extreme the market is into one of these key planetary key dates, the greater the potential for a reversal the other way. If we're going sideways, it's not much potential for a reversal. You see, so there we go. It's a mirror image thing. So if we're going sideways into the window, then it's probably going to go sideways after the window, and that's what happens. So I wouldn't do anything there on the corn. Okay, here's the gold. Did not work. Every now and then I have a miss, and there you go. The gold just accelerated. Here's another principle. When it doesn't work on something that has a fairly good batting average, then often it will be, like huge. It won't just miss by a little bit. It'll miss by a whole lot. So that's why you want to have stop losses. And if it doesn't work within a day or so, or you take out that level there, like we're going up, we're going to sell there. If we take out that level and the next day or the day after, you want to be getting out. And if you want to be aggressive, you might want to stop and reverse and go with the flow. Okay, here's silver was a little better with selling at that window. We made a little bit of a top there. You could have made a little small amount of money there on the silver. Here's beans. It was you had a chance to make a little bit of money on the beans and pulled back for a couple of days. If you want to hang in there on the beans, you could have made bigger money down the road about several days later. Here's the wheat. This is the way it's supposed to look. Wheat went down, down, down into the solar eclipse and then went up, up, up. That's what we like to. That's what we're looking for. S&P made a nice short-term top there the next day on the 27th.
They laughed at me about that solar eclipse top.
Okay, well, did they go and do their homework? Probably not.
No, they just, a lot of people think it's
Dale,
malarkey.
Dale, they all laughed at Christopher Columbus when he said the world was round.
Right? Yeah. Is it?
Yeah.
I thought it was like
it's a song lyric,
oh yeah.
Ha ha ha! Who's got the last laugh now, right? So
yeah.
All right, here's T-bonds. Rallies up. There you go. You're 1 day early and maybe a half of a handle from the top there, from a nice top there. And for the folks who don't know about bonds, every handle in bonds is $1,000. It's kind of a big animal, So you drop a couple of handles, you're looking at a couple $1,000s in just a few days. Here's a dollar. I know you folks like currencies. There you go. There's your dollar index.
That was pretty good.
Right there on the eclipse. You see that?
Yeah.
That's why I showed you this stuff so you'll see that you might want to pay attention to this stuff. Oh, look at that. There's the euro making a low. Of course, it's a mirror image of the dollar pretty much.
Right.
and it's making a low right there on the eclipse. Here's the yen. The yen of all the currencies probably, historically, has followed this stuff the best.
I wonder why.
I don't know. I back when I was in when I first got on the internet, I joined some email trading group, and they were all skeptical, like you were indicating with your folks there, and they were
Yeah.
making fun of me and making jokes. And one guy who was skeptical had a background in statistic computers, and he ran the data for all the markets for the new moon, full moon, and he came back and said, wow, this stuff kind of works well." And he says it looks like the yen is the best. So there you go. All right, there we go. There's a beautiful low there, right for the right to the day for the yen. So All right, now I'm going to shift gears here. We're going to look at what I call the planetary index. Some of you may have heard of Donald Bradley or the Bradley index
Yes.
for the forecast in the stock market.
Arch
And
Crawford
so
kind of
I
made
do
him
this a couple. I do this a couple weeks.
popularized him.
I'm sorry.
Arch Crawford kind of popularized the Bradley model.
Well, I don't know about that, but okay.
All right. Well,
Anyway, so I
that's
do
where
this a
learned
couple
about it.
weeks in advance for a month at a time. And so, I do this blue line back in November. This is for December. There's your dates there, starting on Monday the 2nd, ending on Friday the 27th. And I drew the blue line there, back in November. And then I overlay the actual S&P 10-minute bar chart on top of that. And you can see, I think that worked out pretty well.
Yeah. So it's a Bradley kind of like in a way, a fractal, Norm?
No, but that's but you must be like psychopathic, because that's the next thing I'm going to talk about.
I
There's a
am.
little joke there, psychopath.
How did you know?
What's that?
What's your address? You bastard. I'm psychopathic.
There's a joke. All right, here we go.
So-
Let's look at now. I also do fractals every year in February.
All right, pull the
look
corn
at
chart
that.
up a little bit more. It's not
What's
the
that?
full. Pull the chart up a little bit more.
I'm
It's
going
not.
to. Okay.
Oh, okay, go ahead.
It takes up the whole screen, the whole page.
Oh, okay.
It's big. It's
All
big.
right. I got
All
it.
right. Anyway, every February, I look at the January price section and use that. I can extrapolate for the year. What is, for some of your folks don't know, what is a fractal? Let's take it comes from nature. And one of the more perfect examples of a fractal item is a pine tree. If you ever look at a pine tree, its branches look like miniature pine trees. The twigs look like miniature branches. So what a fractal is where you have the same pattern repeating at different levels of order. Elliott wave is a fractal system. Okay. So if we could take some things, we could take a small piece of that and then extrapolate it out to the bigger picture, and you might end up with a pretty good forecast. Well, look at the corn here. Look at that. See the blue bars? I did that back in February. And then after the fact, I overlaid the black bars, the actual prices. And you can see this kind of nailed the top there in corn back in June. You see that? Okay.
Nice.
Here's OJ. Now, hardly anybody trades OJ, but just for fun, I thought I would do that. And
Eddie Murphy and the Duke brothers.
I was just going to mention that. Looking good, feeling good, Lewis.
Yeah.
All right, there you go. There you go. So the fractal, that's the blue bars, done back in February. Actually, the publishing date was February the 11th for the rest of the year. And look at that. It said OJ was going down, down, down. And you can see the black bars. That's pretty much what it did. You see that?
Yep.
That's pretty amazing. I think it says we live in a fractal universe. I don't know if you folks care about how the universe is put together, but that kind of determines how these markets work, because we're part of the big picture. Here's
And
your Dow
a
Jones.
fractured country.
Okay, here's your Dow Jones, and it said that we had the potential, if we get on this track, that we're going to have a huge up move, and that's what we had. You see that?
Yep.
Now, here's another thing. Look, sometimes it looks like it's not working that well.
Yeah, it inverts.
It has a temporary inversion. I'm going to put my cursor right there at that top, on that blue top.
Yeah.
I'm going to go down and look at the blue bars. A lot of times it'll nail the turn, and the timing is still good, even though the direction is up inverted. You see?
So how do you know that going into it?
Well, you look at what the market's doing at that window. This is a change in trend window there, obviously.
Okay.
And the blue bars are making a turn. Okay.
Right.
And then you say, oh, it didn't go up, it went down. Well, now I'll look for a low, right?
Got it.
Here's wheat. wheat was kind of funny because it nailed it beautifully. Look at that. See that? And it etched out a giant W for wheat. You see that?
Oh, yeah. I like that.
And that's what the fractal forecasted. You see the forecast, the
Yeah.
fractal had a big W, and that's what it did. Okay.
Nice.
Okay. I know you folks like currencies, so I thought I'd sprinkle in here some currencies, and there you go. Look at that. There's the euro. Wasn't perfect, but when it did get on track, started getting on track about April of this past year. And look at that. Once it got on track, it was pretty good. And look at that. It came very close to nailing that low in October. You see that?
Yeah.
Here's your Swiss franc. Look at
Yeah.
that. That's pretty good.
Yeah.
See, I'm thinking about starting to track the Vienna franc, because I understand.
Oh, God, those were the best in Chicago.
What's that?
Those were the Chicago hot dogs. were the
Right,
best,
exactly.
Yeah. Yeah. You're making me hungry, buddy.
All right, here's a dollar. Look at that. That's pretty good. You see? Oh, here's a great example of a temporary inversion. Let's look at that blue bar there. It's supposed to have been a low. It turned out to be, let's see, I'm going to go straight up now. And bing, bang, bong. There, it's the top there. Almost exactly. You see that?
Yeah.
Right, these fractals are amazing. Okay. All right, what's coming up here? Why did I ask to go come on your show, Dale? Because it's huge. Look at this long list of stuff that's happening between started yesterday and today and into the weekend. You see that?
Yeah.
Including Saturn getting together with Pluto. That only occurs every 33 and a half years. They land in a particular sign in the zodiac. There's 12 signs of the zodiac, And so I went and researched. Gee, everything's landing in Capricorn, as you can see this picture here. Everything's all bunched together. There's Saturn, there's Pluto, that's Mercury, that's the Sun. They're all bunched together there in a small arc on the circle, you see?
Yeah.
Okay, Saturn and Pluto only get together every 33 and a half years. I went and researched when was the last time they were in the sign Capricorn and together. Together is called conjunct. I had to go back. I went through 600 years of data. Finally found it was back 502 years ago, January the
Wow.
3rd of 1518. You probably remember that, Dale, right?
We had a great party.
There you go.
I was a serf.
There you go.
So
Surf's up, right?
yeah, feudalism.
All right. Anyway, got lots of stuff. I use the U.S. natal chart also to forecast the U.S. financials, such as stocks, D bonds, and the U.S. dollar. And that's the natal chart. As we take a snapshot of the planets at the beginning of something, like when Dale was born or when our country was founded on July the 4th, 1776. I have this nailed down, I believe, to the minute when Thomas Jefferson first signed the Declaration of Independence at 2:12 in the morning. And I got this. I do day trading where you have to know they get it down to the exact minute. All right, so we got yesterday from the point of view of the sun. That's Helio or heliocentric. Saturn got together with Pluto that started yesterday. Then we had some stuff with the U.S. natal chart, and then we had the full moon lunar eclipse is this afternoon at 2:21, 2:22 p.m. Eastern time. We're going to round up our usual suspects: financials, grains, precious metals, coffee, and because it's in the full moon is in the lunar eclipse is in the sign of Cancer, we'll be looking at silver and also stocks. And yeah, okay, so there we go. And then we have another one of my top things is due to the relative motion of the Earth. It appears that's the operative word. It appears when you look out at the planets that they look like they stop their motion and reverse their direction. Jail, you probably heard of Mercury retrograde and that kind of thing. That's all
Yeah.
part of this. It's when they stop their motion momentarily. That's called a station point. The planet Uranus is going to be turning direct. It's going to stop to go forward in the sign of Taurus the Bull this weekend. Okay. Yeah, I can't emphasize enough how much huge stuff is all happening within a couple of days here. When this has happened in the past, when we had when you had all the planets bunched up like that, often occurs with a major turn in the markets. You might remember 1987, we had what they call the Mayan harmonic convergence, 6 planets all lined up together in a short amount, almost right together there on August the 25th, 87, led to the crash of 87 in October. That was the high of the year. Okay, I'm not saying we're going to have a crash now, but I think we had the potential here for a significant turns in many markets. Okay,
Okay.
so let's see what else we got. We got Saturn and Pluto this weekend. Uranus turning direct. We got the eclipse this afternoon, plus all this stuff. This is one long list of stuff. You see that? That's what it looks like in terms of the planets all bunched up together. There's the moon down there. It's going to be exactly opposite the sun this afternoon for the eclipse. And open to filling questions or comments, whatever,
Okay.
Anybody in your chat room there have any questions or
I'm
comments?
looking at any
or-
questions for, you put it in chat if you want to ask Norm something. And I have Q&A up too, if you want to do it there. Go ahead, Norm. Nothing yet. I'll let you know.
Okay. Well, here's how you get a hold of me. I've been doing this a long time. I had enough success there investing in college that I took my winnings and bought a
Oh,
membership.
I got
on the,
one. Anything for Jan 18th from Brock? He
I'm
must
sorry?
have something. Anything for January 18th? Brock
I don't
is
know. I'm
asking.
focused on this is huge. Why would I
Okay.
focus on January 18th when this is one of the biggest windows in decades?
Okay.
Let's focus
Fair
on
answer.
right now. How we can make some money here in the next 1 to 2 trading days.
Okay.
I think,
He's saying it's a possibility, good Tom. And Brock, if you have an interest in this kind of stuff, Norm's a good guy for you to.
There you go. There's my contact
embellish it.
information right there. And so just for example, the S&P has been going up, up, up. You might have heard about it. And
Yeah.
I had Fibonacci. I have a formula for the S&P that convert the position of the planets to prices. And also I do Fibonacci, and all this stuff comes together right around the 3288 to 3292 level. And
Okay.
so far this morning, I think the S&P got to 3287.88, something like that on the futures. We'll have to see what the cash does when we open up here at 9:30. So anyway, and you look at any markets that are making any kind of extreme overbought, oversold at the top of their channel, bottom of their channel here today or into the weekend, and there's a good chance that they're going to reverse by Monday. Okay, on my stock market, I have a sentiment indicator for the stock market. I got a rare sell signal based on yesterday's action. Where I look at the option numbers, and there's too many call buyers. There's too many people playing with the calls. Or everybody thinks the only way they make money now. You forget selling. Just buy. That's and you know what happens when we get there. The sentiment indicators get to extreme.
When was the last time we were this extreme on that number? Can you remember?
Well, the thing is, this is unprecedented to get I call it the Now Index. I named it
Right.
after my old badge there on the floor. I was
Right.
Now, NOW.
Yeah.
And so to get this to line up with all this planetary stuff lining up is unbelievable. I don't remember the last time I ever saw anything like this before.
And you've seen some cycles, bro.
This is to say it's huge is an understatement in my opinion. So
Okay.
here's my contact information. Looking forward to helping some of your folks here. I got free classes, free trials, free letters, free. It's all free. Some of my stuff, a lot of my stuff is free, and if you mention Dale's name, you can get it free with a money back.
No. If you mention my name, it's not only free, but Norm will pay you for taking this class.
Okay, well,
I mean, how much? You can't get any more extreme than free, except if you paid someone to listen to you, which I do when I go out singing. I pay for people to listen to me. Anyway,
you mention Dale, you get it free with a money back guarantee.
Yeah. Okay.
All right,
Thanks
Dale.
so much,
Anything
Norm.
else?
What a
Anybody
cool
have
day.
any questions before I go? There's my contact information. I'm in sunny Naples, Florida. 239-594-3939. Unless you only have audio, in case you only have audio. There's my long email address, so you might want to take a screenshot of my contact information there.
Okay.
N Winskit and Bark with a Q in the middle there. That's like root beer, Bark, BARQ, mail.com. Skype is nwinsky_1. So there you go.
Okay, just one question, Norm.
Get a hold of me right away before I get busy at the end of the month. I'm doing the next month's letter. So this is the best time to get a hold of me right now.
Thank you much, Trading Warrior, brother.
Thank you very much.
Good luck on this turn.
Thank you. You too. I hope you figure out how to make some money.
So that's a wrap, everyone. Have a great weekend. Good hunting the rest of the day. Thank you again, Norm Winsky. And really, if you have an interest in this type of work, check it out. There's some no-risk things to get to know Norm. And I'll see everyone on Monday. Enjoy your weekend. Remember, don't just count your pips, count your blessings. Adios, everyone. You're welcome, Brock, Richard. Got WhatsApp, the mobile, Norm. Are you still there? Do you have WhatsApp?
You talking to me?
Yeah. Richard's asking.
What did you ask me?
It's an app called WhatsApp.
Oh.
Why don't you just take his Skype down, Richard, or his phone number? I don't think Norm uses WhatsApp. That's
No,
for
I don't have that. I
you
know
millennials. Okay.
Yeah, I know what he's talking about. I don't have that.
Yeah, yeah. Norm and I still, have to.
We're over the max.
We still use a rotary phone.
We're over the maximum age for the WhatsApp.
Yeah, we can't do that. We're in ARP. They don't allow it. All right, Norm. Have a great weekend, buddy.
All right. Thanks a lot, Dale.
I'll see you.